Fatih Birol, Executive Director of IEA, that's International Energy Agency, joins us now. Good morning, sir. Thank you for joining us. Crude prices have been on a sharp upswing. Now, Brent is at $77. How do you analyze the factors that are at play, and what do you think the implications would be for economies like India?
First of all, looking at India, India is a growing economy, and it is one of the bright spots in the global economy today. And the growing economy needs energy, and as such, we see that India's oil consumption and also oil imports are growing very strongly. As of today, India imports about 4 million barrels per day of oil, and we expect this will increase in the next years to come. Around 2030, this will increase by almost a factor of 2, reaching above 7 million barrels per day. And this means India's import bill will also increase, and as such, a challenge for the trade balances. Our calculations on India shows that India, as of 2017, paid about $70 billion to import oil, and in 2030 this will go up to about $230 billion. And if the prices of oil goes higher and higher, of course this bill, this 230 billion, may be even higher than what we calculate today. And when we look at the global oil markets today, they are going some difficult times. Tightening of the markets is the name of the game. And when we look at the different factors today, what key producers do in order to increase the prices, the strong oil demand growth coming from China, India, and other countries, plus the political developments in Venezuela and elsewhere, tighten the markets, and as a result, we have today prices above $75, which is, I think, not a good news for major oil importing countries such as India.
So, Mr. Birol, what to your mind are the genuine factors responsible for this kind of rally that we're seeing in crude? I mean, it's a 56% rise in the last 12 months. That's no mean feat. Do you see this surge being sustainable, or do you think this is just a knee-jerk reaction that's taking place?
The price today, $75, $76, and maybe higher, is driven by, by fundamentals. Demand is very strong. We have seen a very strong demand growth last year and this year. Plus, Venezuela, the production is falling down substantially. Only in 2 years of time, Venezuelan production is divided by 2, and we expect perhaps worse to come. And also, some key producing countries do not want to increase the production, as they have a Vienna agreement, which also underlines the fundamentals of the oil markets today. So if there are some geopolitical developments on top of these tight markets, it may have further implications for the market in the next months to come.
Okay, fair point. So do you see shale gas and shale oil drilling also catching up with these high oil prices? And also there is a lot of electric vehicle related talk as well happening across the world. How is it that it's, both these factors are going to impact oil prices according to you?
Yes, shale oil from United States will definitely will be comforting the markets. And also electric cars coming from different countries may also make a change, but this is very, very small. I know that your country, India, takes electric cars very seriously, but when we look at the immediate challenge in front of us in the next few years to come, I wouldn't expect that the electric vehicles could change the picture dramatically in this market environment. But when we talk about the challenges, I should also mention that India met a major challenge recently. On 28th of April 2018, this year, Prime Minister Modi announced that all the villages in India have now access to electricity. I can tell you, I study the global energy every day, every month with my colleagues here. I can tell you that this is a historical achievement, and all Indians should be happy and proud of this historical achievement that all Indian villages now have access to electricity. I think it's not only good news for India, but as such, India can be a source of inspiration for many around the world, including Africa.
To hear, some analysts say that OPEC themselves is quite divided. Example, Iran is comfortable with $60–65 a barrel, if you go by their recent commentary, while other countries like Saudi, in the wake of the Aramco IPO, are looking at $100 to a barrel mark.
I think several major producing countries, I read that they may be wanting for higher prices, even higher than what we have now. But I can tell you that in my view, and based on our years and years experiences, higher than these level prices may not be a good news also for the producers, because it will give a boost to you mentioned the shale oil, for example, United States, or deep water in Brazil or in Mexico, which are more costly to produce, and with higher prices, more oil will come from there. And second, higher oil prices would bring the consumers to look at for alternatives. Electric cars deployment may accelerate, and more efficient use of oil and energy will be also positively improved from there, and the share of oil will be less. So in my view, higher prices are not a good news for the countries like India, oil importing countries, but also not a good news strategically for the major oil producers, as they may lose market share in the medium and longer term.
Right, but Mr. Birol, if one were to watch out for, let's say, the next 12 to 24 months, would you be surprised if prices surged further to talk 100 soon enough?
By law, I cannot say you anything about how the prices will be, what the number is. But what I can tell you, two things. One, I expect a lot of volatility in the oil markets. And the second, once again, higher prices are not good for the importers, exporters, and also for the global economy.
Okay, so just last one question, Mr. Birol, before we let you go. How much of this price surge in crude is because of genuine demand fundamentals, and how much of it would you say is because of speculative positioning of global hedge funds?
It is difficult to quantify how much this, how much that, but I can tell you that currently fundamentals are definitely driving the numbers. The not enough supply from the major producers, strong oil demand growth, and also Venezuela is going down the production substantially, are the key drivers of the tight markets today.
Mr. Fatih Birol, thanks so much for taking out precious time of yours all the way from Paris and joining in. It really puts some sense to the kind of frenzy that you're seeing around crude, and we hope our viewers also better understand now what's really leading to this uptick in crude and which way crude is headed from here.